Oh my goodness, is it Friday? Oh my gosh, it's 5 o'clock on a Friday. We should be cheersing right now. How about that? Okay, so a couple of things. Want to follow up. I was unable to do a video yesterday. It was just a bloodbath anyway. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Give me a call if you want to buy or refi. We're going to look at the chart here. And we're going to talk about some crazy stories. I mean, the topic today is about real estate negativity. And what's really interesting is you see a lot of negativity in the news about real estate. And I want to assure you that prior to the crash, it causes people to worry about prices being too high. And I completely understand that. I completely do, because it does look like, hey, prices have gone up 20% year over year. They should probably chill out, right? But it doesn't mean that they'll go negative. See, so like things could slow down and we could be up 5 or 6% for real estate for the next year. And people will be like, oh yeah, see, it's slowed down. We're still up 5 or 6%. On the average home, let's call it 600,000. That's what, 30 grand, 30 to 35 grand. It's going to be more expensive the next year. So a lot of people coming out very bearish on real estate. There's a couple things I want to explore with you on that after we go through and look at what exactly is happening with mortgage bonds. I'm going to move myself out of the way. Aha, the reveal is here. So we talked about this on Wednesday, but essentially we had an indecision candle right here, this guy. And I misspoke, and I'll admit it, saying that, Barry he had a lock alert issued here, and I thought that was premature. And I said that on Wednesday. But I've been saying lock like for this many days. So however, 3 weeks. So, it's not like we disagree about the fact that you should be locking. I've been saying that for this whole time. We should be locking. We should be locking. We should be locking. It doesn't feel good. It doesn't look good. We've got downtrends in place that are holding. This indecision candle, though, right here was a big red flag, because as we tracked, we went back, the last two indecision candles like that we saw both led to steep declines. And remember, we want mortgage bonds to go higher because that means rates are going lower. We don't want to see them go down. Well, after this indecision candle on Wednesday, we had a huge crushing day, down 70 basis points in one day. Just an ugly, ugly candle. Terrible. And then today, at one point, we're in worse shape. So we got down even, further. We were negative at one point today. We finished the day, as you can see, plus 14 basis points. So that's good. But more importantly is the wick on this candle. So this is a really good sign that we should be better off Monday because of the 14 basis points, but that buyers are sort of coming back into play here. And we should at least come up and test some of these areas up in here. I think we should at least get back to this place right here. If not Monday, maybe Tuesday. We'll see what happens. But the bad news is rates got worse by about 1/8 to 1/4%. If you have a low credit score, it may have gotten even worse than that. Higher credit score folks, not as affected. Higher credit score folks, maybe 1/8, maybe not. Maybe it's just such a small difference that your lender will cover the difference for you just because they don't want to tell you, hey, rates went up. That could happen. I know I will do that if I can in certain circumstances. So the big thing that I'm looking at here is this. So we had this anomaly, this top here. But if you take that out and you just sort of work off of that right there is the downtrend that I'm really looking at. Okay. This guy right here. What's up with this? It kind of coincides perfectly, like right there. Okay. That's what I'm looking at, because this is the one that we seem to be keying off of now. And that's the one, aside from this one little anomaly here, which was quickly disintegrated. And also, the indecision candle, as you can see, touched that trend before it blew through it on the following day. That's the one I want to see. I want to see us break through that. We need to get out of that ASAP, because that downtrend right there is not good with the Fed tapering coming along. All right, so that's the prognosis for mortgage rates. Not so great. So when you see negativity in the news, let's just go ahead and look at it. Mortgage market is unprepared for climate risks, says industry report. This is Diana Olick here with her typical super bearish, outlook on mortgages. This time, because she says the mortgage market is unprepared for climate risk. Climate risk. This is not a joke. And you should see the stuff that's in here. It's so absurd. I mean, they show you these extremely rare photos of, these kinds of situations. The mortgage market doesn't have a whole lot to do with this. Remember, the mortgage market requires you to get homeowners insurance. The thing that she should be talking about, if we're really talking about something here on this front, is how these types of natural disasters can cause problems for people being able to buy homes. Why? Because insurance is getting more expensive, especially here in San Diego. I keep seeing people, if you're buying in an area that was ever affected by a fire, you have to use a California Fair plan. You're going to pay $300 or $400 a month. You're going to have 2 different insurance policies, the one that the insurance company is willing to write, and then the one in the California Fair plan that covers the difference. They don't want to cover these homes that have ever been in a fire zone. And so stuff like that. What if you want to, buy a home in New Orleans that's been flooded before? How much is the insurance going to be? Because if they want to charge you $5,000 a year for insurance, a lot of people won't buy or won't be able to buy, or they'll choose to buy elsewhere. That's the real story, not, record-setting rain, floods. Mortgage lenders and investors are woefully unprepared not to mitigate their risk, but to even gauge that risk, according to a new report from the Mortgage Bankers Association. This is so dumb. If you read this further, I'm going to post this in the YouTube. You can read it if you want to. Gobbledygook horseshit is what this is. But what they're doing is they're posting negative information about real estate. Notice the category here: adaptation. Adaptation. What are we adapting to? Listen, bottom line is these things have always happened. Tornadoes, floods, fires. These things are always going to happen. It's the insurance that's the real concern. How do you make sure people can get affordable insurance when insurance companies, there are a lot of homes right here in San Diego County where people will go, hey, I called 3, they're in contract to buy a home, and they call me and they say, hey, I've called 3 insurance companies and none of them will give me insurance on this house. That's when I say, okay, call a broker, get the California Fair plan, and we get them taken care of. That is a bigger concern than overall, she's calling climate risk. It's not climate risk, it's just natural disasters. But anyway, the negative information, when it gets posted like this, real estate is bullish. Remember, we have huge institutions buying real estate hand over fist. These are typically the cash buyers. Remember when cash buyers used to be the lowball guys? Then they weren't as tough to compete with. But now cash buyers are paying above, they're the highest offer, and they're all cash. That's hard to compete with. That's why a lot of first-time buyers are struggling in this market, because you end up competing with some of those guys. Not as much in San Diego, but in Arizona, Florida, Vegas, a lot of the other places where the median price is much lower, you are having a lot of struggle there. So, that is a much bigger and more important story, in my opinion. Here's something that's interesting. CDC sort of overruled the FDA's findings about the COVID boosters. I just want everyone to see these words. This was a scientific close call. If the person who overrules it says that it's a close call, scientifically speaking, based on current knowledge, we don't have all the knowledge, I just think you should know that. You do with that information what you want. Now, there was something interesting that happened today. Bitcoin, cryptocurrency, China, they came in and they said, hey, we are now, let's look at the story. They said, we are now making it illegal. We're not just banning cryptocurrency. We're actually going to make it illegal for cryptocurrency transactions to take place. Making it illegal, which is interesting. Now, they've banned cryptocurrency multiple times. I don't know why the market still reacts to this. The fact that the market still reacts to this crap just shows you that they don't understand it yet, because that kind of information, those kinds of things happening, is actually the reason why Bitcoin is there. Those are the reason why Bitcoin should go higher. I don't like the fact right now that cryptocurrency, particularly Bitcoin, seems to be correlated with the stock market. However, we got to remember there's certain things. If you're like me and you want or expect or hope that Bitcoin will get to $1 million a coin one day, there are a lot of things that have to happen between now and then. And one of them is you need institutional money, you need institutional purchasing and ownership of Bitcoin. Well, with institutional purchasing and ownership of Bitcoin, you get correlation to the other assets that institutions purchase and own. And so that could be something that will be an unfortunate side effect of Bitcoin being purchased and owned by institutions. But you need regulation. You need the SEC. if countries want to participate in Bitcoin, like El Salvador, or if countries want to not participate in Bitcoin, like China, it should make absolutely no difference. In fact, if China is going to ban cryptocurrency transactions completely, first of all, you can't really do that. There's no way to really do that. And you'd have to just cut the internet completely. There's no other way to really do that. Now, they could do a lot of regulation with the banking system. Say, hey, do not accept deposits from these types of institutions and whatnot. But there's also ways around that too. So, you can't really do it. But the FUD, as they call it, will still work. It still pushes prices lower. It's going to be very interesting to see how Bitcoin finishes the year. Very interesting. But Ethereum under 3,000, Bitcoin back down into the low 40s as we had gotten back up to the mid 40s. Now back down to the low 40s. I still highly recommend, if you want to own this stuff, to buy it in small increments, buy it regularly, buy it automatically. You don't need to try to time the market on this. Just buy small amounts every week and just let it do what it's going to do. Okay. This is also an interesting one. I'm not going to talk about it, but the Robinhood executives, remember the GameStop short squeeze situation? They've been investigated for this. There's a lot of interesting communications that went on there. I would not use Robinhood. Okay. Just don't use it. There's plenty of brokerages out there. You don't need Robinhood. Don't use it. They've made it very, very clear. They don't give a rip about the little guy. So why? Why do it? Why participate in it? It just makes no sense. Markets are pretty flat today. Oil, though, gaining steam. Remember that got down in the low 60s? And when we said buy it, we said pull the trigger for crying out loud. If you did, you can send me a Christmas card, maybe a bottle of wine. Gold, not doing well. Don't expect gold to do well. Now down to 1750, mid 1700s. I just don't see how gold wins from here. Like, I feel really bad. If you own gold right now, I feel like you have a lot of risk and very little reward opportunity. I even like the risk reward better to enter oil here, believe it or not. I think we know where that's headed. And again, with the crypto, slowly get in over time, a little bit each week, and don't worry about it. Look at the price because you're curious, but don't worry about it. Just know in 10 years, it's going to burst so much more money. So what should we expect from the negative stuff that you're going to see about real estate? You're going to see lots of people talking about crash. I mean, if you get on YouTube and you type in like real estate crash, let's do it. Let's just do that real quick. Oh, wait a minute. That was actually a good search term. Real estate crash 2021. See how that popped up? Let's see that. Real estate housing crash Q4 2021. This guy. Million views. Housing market crash 2021. Perfect storm. 54,000 views. There's a whole bunch of these. Even Meet Kevin said the coming housing crash, how bad it'll be. This guy, Reventure Consulting, he's constantly talking about housing crash. But if you watch his videos and you actually look at his points, they're very flimsy, very, very flimsy. Because what you have to realize is all these people talking about housing crashes, like most of these people don't know what actually causes a housing crash. They don't understand how difficult it actually is to cause a housing crash. Because remember, we went up 20% year over year. So if we went down 5% next year, let's say, which I don't think we'll probably be up 5%. Let's say we went down 5%. Is that a housing crash? When's a housing crash? A housing crash is if you lose 20%, right? And over what time frame? Let's call it a year. But let's say even year over year, let's say you lose 20% in housing. Well, we just went up 20%. So if you lost 20%, sure would suck. Don't see how that's possible. You need way more inventory in order for housing crash to happen. You need lots of inventory. That's how anything crashes. You have lots of people who want to sell. You don't have enough people who want to buy. But these guys who are doing this, particularly this guy, the Reventure Consulting guy, wherever he is, this guy is just every day making these videos, telling people how, unaffordable homes are and all this stuff. And really his data is just not good. I don't know if these people are somehow getting paid by these big Wall Street firms that are buying real estate literally hand over fist all over the place as bond replacement. so that they can get them cheaper or so that they can scare away buyers. I have no idea why. But when you watch these guys, I mean, go ahead and watch them. Just watch them. Look at this one. 2021 housing. Do you see his thumbnail? Pew! Housing crash. This is another same guy. 40%. Los Angeles. Look at that. 2021 minus 40%. Look at all this negative information. I think all of this is a good, healthy sign, because one of the things that you have to remember about a crash, and none of these people seem to understand that, markets can only crash if no one expects them to crash. If enough people are expecting them to crash, they can't crash. What makes them crash is you run out of buyers. Now, I have seen some things that scare me, particularly here just in the last couple hours. I've seen people posting on Facebook about these different lending programs and different lending offerings that are available for very big loan amounts with low down payments. That's not good. That is not good. That is the type of loan that is subprime, that is toxic, that is bad for the housing market. The last thing we need is people buying expensive homes or homes that are up 20% year over year with little down payment. Okay, that's not good. Right now, if you're buying a $2 million house in San Diego or even $1 million house, you're putting 20% down. At least. That's good. That's healthy. We don't want people buying homes with low down payments, especially higher priced homes with low down payments. There are FHA programs obviously available. There are lower down payments for conventional loans, of course, 3.5% to 5%. First-time buyers, so on and so forth, totally okay. But remember, the FHA loan is also very expensive. Expensive mortgage insurance, expensive upfront insurance. You don't want to have to do that unless you absolutely have to. The last thing we need is low down payment. I would rather see a lender come in and say, listen, we'll do your loan, no credit score requirement, no income requirement, but you have to put 40% down. Me personally, as an investor, I would loan you that money, right? Because you're putting 40% down. We have a lot of skin in the game. You're not going to want to walk away from that. You're going to want to make that payment, okay? But when you start having low down payment, even if you say, no, you've got to have a 700 credit score. You've got to have a low debt to income ratio. When you start doing low down payment stuff for big loan amounts especially, that is not good. So hopefully we won't see that trend continue, but I'm seeing a lot of people making the exact same post today about that exact type of program, which is not good. So we do have to be careful about that. But that said, there are lots of programs out there for first-time buyers and things like that. You have CalHAFO, you have other down payment assistance programs. Those types of things are good to have in place. They're difficult to get through now. It's tough to get an offer accepted if you have down payment assistance, but some people are able to do it. And so it's more of a game. It's more of a buyer. It's more of a market where a wealthy buyer wins. I don't know how else to say it. A wealthier buyer wins. You have lots of money in the bank. You have a lot of down payment. You're winning probably in this market. It's harder to get VA offers accepted, although we did get several accepted this week. So thank you out there to the listing agents who are helping veterans buy their homes, especially their first homes here in San Diego. So it's still happening, but I would much rather see new programs that are higher down payment and weaker on credit score than to see ones that are low down payment and more strict about credit score. That I don't like to see. So that's not something that's rampant yet. It's just something that just kind of started right now, but we're going to keep a very close eye on that. All right, guys, it's that time. I got to make a few more calls. Then I got to get out of here. You'll have a great day, and I will see you soon.